Okay, and we are now live. So, hello and welcome to anyone joining us just a few minutes early. My name is Charlotte. I'll be your money show host for this session. I do have Phil here with me in the Zoom room, ready to begin on time at
Hi guys, we're
1:35
ready on
p.m.
time. All right, good.
Yes.
I'm talking to somebody, give it the run. Hey, I'm doing good, kid. How are you? Hi, everybody. We're talking in Nicole, by the way. Okay, go ahead. I'm getting
Hi,
ready to go on
Nicole.
the air. So, hi, Nicole. There you go. Charlotte says hello. Yeah, I sure do. I mean, obviously, the Armada got the oil prices up early. Talks of a trilateral meeting between Putin, Trump, and Zelensky, or at least the three countries that these people run, seem to bring prices back down. So initially, the markets were up on concerns about the Armada. They pulled back on the possibility of peace. So we've been back and forth. If you look at the inventories, I think they're getting back to normal. I think the last couple of weeks were end of the year shenanigans, and now we're getting back to seeing some real numbers. Um, and I think the draw on crude definitely supportive, keeping the market up. The demand numbers really bounce back. They should be strong. And next week, we're going to see the big impact from the storm. So that's going to have a big impact as well because production is going to be down. Usage is going to be up. So it's going to be real interesting next week. So I had to step away a few minutes ago. Where are we at right now? I know we pulled back from the highs on that headline about the trilateral meeting. Yeah. Yeah, I mean, obviously, the market reacts to that headline. It would definitely be a bearish event if it actually happens. Of course, there's a lot of skepticism because we've seen this play out before, right? When you get your hopes up, the trilateral talks, correct, get pulled back down. So, yeah, obviously, when you get that kind of a situation, it's there. So I think now, of course, now we're buckling up, waiting for what the Fed's going to say, right? So I think that'll probably be the next determining factor. A lot of talk on the dollar being down. I mean, that's actually positive for oil in a lot of ways. Not only will it drive up prices, it'll make oil cheaper overseas, and it should help our exports. Yeah, which is good for the oil good for oil prices and good for exporters. We're already exporting a record amount. More people will focus on the US because their prices are going to be more competitive. So that should be supportive as well. Correct. Yeah, the geopolitics, who cares about fundamentals? Just what's the next headline, right? So stay tuned. All right, I better let you go, dear. Thank you. Bye. Here you go. Yeah. How do you like Iowa, though? I'm sorry. We can't let everybody know.
It's okay.
We're
It's
not telling her
cold.
where she is. She's in a secret location, okay? We cannot share that with anybody who's tuning in right now. I'm just sorry.
Well, to those of you who are tuning in, Phil and I were talking before we went live just about how very cold it is in the Midwest right now. But he was also trying to share some fun things to do with me in the tri-state area around
Yes.
Iowa, where I'm hiding, and no one will know exactly where I
Nobody
am.
will know. Shh. Here we go. It is nice. Don't tell anybody. This is our secret. Just us and the million people that are tuning in.
Yes,
Don't
everyone.
share it with anybody. Actually, the underground bunker, if you've ever heard about that, it's right by Charlotte's house, right down the street. Shh. Top secret, though. I can't tell you that. So
Yeah, I think that's where they keep the aliens.
that's right. Yeah. Uh,
And we will
yeah.
be getting started in just a minute here, everyone. Thank you all for
So
your patience.
here we go.
Hello, everyone, and welcome to the session. It is my pleasure to introduce our next speaker, Phil Flynn, Senior Energy Analyst at Price Futures Group and a Fox Business Network contributor. Now, Phil is one of the world's leading market analysts, providing individual investors, professional traders, and institutions with up-to-the-minute investment and risk management insight into global petroleum, gasoline, and energy markets. Now, to our live viewers, if you have questions for Phil throughout this session, please feel free to share them in the live chat box. It's on the right side of the video player there. And with that all said, Phil, I will hand the mic over to you. I'll be here if you need me, but the floor is all yours.
Thank you, Charlotte, and welcome everybody. When we started to look into today's presentation, we're talking about the portfolio, the end of the year, where you're at, where you should be. And one of the places you should have been is the Money Show presentations last year, because they told you a lot what was going to happen. In fact, in one of my presentations we did, when it came to the historic moves that we've seen in energies, but mainly the precious metals as well. So we're going to get into all of that. And the title of my situation that really ties in with where your portfolio should be is a global engine of stability and growth. The America's roaring comeback under President Trump, and how President Trump's policies with record gross domestic product, energy dominance is driving the economy, right? And driving what's happening in the global metals market. So really go up, folks, because the economy's on fire right now. And we're going to get into that, right? One of the things that we're going to get into, of course, has been the metals market, historic moves that we talked about in our last presentation. So you can kind of look back a little bit. We were talking about the dominance of energy sources, but also the coming revolution when it comes to energy, metals, and why it needs to be part of your portfolio. If it isn't already, you've come to the right presentation. If you already have it here, let me know. But one of the things, of course, I always have to remind folks, mainly what I talk about is commodities. That's my main thing. And of course, commodities are very risky. They're not for everybody, right? So if you're invested in commodities directly, if it's not an ETF or whatever, they have a high degree of risk, high degree of profit potential as well, but you got to be careful. It's not for everybody. When we talk about the risk in commodities, right now, I think on one hand, we look at the moves in the silver market, they're riskier than they've ever been, right? But at the same time, the profit potential is bigger than it's ever been. We're seeing historic moves. So in some ways, this is the best of times, it's the worst of times, right? But if you can't afford to lose, you can't afford to win, and the volatility is high. So make sure before you get involved with commodities directly, no matter how attractive these moves might look, make sure you're in a financial position to do so. And if not, look for lower risk investments. So, they also say if you trade commodities, you might be crazy. I'm living proof of that. So I'm glad you've come here to talk about it. But really, what I'm really here to talk about, the reason why I'm so excited about your portfolio, our portfolio, stock market at record highs, metals at record highs, is peace and prosperity. And I think we saw it a lot at President Trump's historic Davos speech, where he called out, the global elites, right? The American first policies is really a world first policy because of the craziness that we've seen in the global elitist, the one world government folks, the people that are focused only on climate change and putting money in their pockets as opposed to real solutions for a real world. And it's a real world of common sense. And this is why we're going to see probably this year and the years to come one of the most powerful economic transformations in the history of the country. And I think we're starting to see it already. And we're going to go over some of the reasons why that's happening. A lot of it has to be President Trump, believe it or not. His policies have been driving so much. When you see low oil prices, you see mortgage rates starting to come down. The inflation that was out of control, believe it or not, it's coming down. I know if you went to the grocery store, you're not feeling it yet, but you will. But if you go to the gas tank, you definitely will. If you're paying your power bill, you might not feel it right away, especially if you're in a blue state. Blue states' electricity prices are higher because of their crazy policies. But That's also a good thing only because it's showing the demand for electricity is through the roof and repowering the economy. And we're going to have to deal with those high prices, rebuilding the power grid, but we're also going to have to get private investment into the sector because the billionaire companies and millionaire companies and trillionaire companies that are making these artificial intelligence moves have to pick up a little bit of the bill because they're going to benefit. Everybody else will too, but to rebuild that power grid, we're going to make part of that. Let's just talk about the GDP. You see that GDP number, 4.4%. No, that's not China's GDP. That's the US. Now, I remember people, under the last administration saying we never get to a 4.4% GDP or revise it. We wouldn't see growth grow at the fastest pace in 2 years. And it's growth that isn't coming from an economy that was shut down. It's coming from an economy that's being reinvigorated with low energy prices, more opportunities, more investment, and a shrinking trade deficit, thanks to President Trump. All the naysayers, and I wrote articles about Liberation Day when it came to the tariffs and President Trump's policies, and how all the economic experts said, she'll be in a recession in no time. All the countries in the world are going to hate us. They're not going to trade with us. It's going to fall apart. But what's happened? Look at that number. The exact opposite. We're going to talk about how we can get into this, but the economy might even be stronger than you think. Look at that speedometer. I don't know if that's in the metric system or what the hell it is, but it's looking strong, right? The Atlanta Fed says the growth is really at 5.4%. China is at 5% year over year. Consider that. If the Atlanta GDP number is 5.4, China's at 5%. Think of this. China is spending billions of dollars to support their economy. Here in the US, we're taking money out of the government, putting it back into the private sector. Government jobs, waste, fraud, and abuse is being eliminated. We're taking those steps. That's going to lower the trade deficit. It's going to lower the budget deficit over time. If you're not wasting money, you do things more efficiently, that's going to be good for the government. So our speedometer, we're almost overtaking China in growth. And people said, no, that's not going to happen. And one of the things that really got me upset and got people upset with the Federal Reserve and economic experts was this mantra that tariffs cause inflation. And I'm like, get a history book. It's never happened before. Yes, there are certain things that happen when you put on tariffs. Some prices go up, other prices go down, right? People will say, well, China's just going to raise their price on consumers. They didn't. Why? And well, in some cases they did, but in most cases they can't. Because the only reason we buy Chinese goods is because they're cheap, right? If they become expensive, we're going to look for an American alternative. That's good for American companies. So China's going to have to compete. And we're going to get into that a little bit more. So we're really debunking what the experts were saying, right? Many experts said that Trump couldn't lower energy prices, that, it's a global market. Presidents can't control energy prices. And oh my goodness, when he puts tariffs, he got Canada mad at us. They're going to stop sending us oil. Oh no, we're going to raise the prices. Didn't happen, did it? No. Canada's still mad at us, by the way. Well, at least part of Canada is. Actually, Alberta, I got a lot of clients in Alberta. They love us. Saskatchewan, they love us. They love Trump. I think they want to succeed, but don't tell me that could be subversive. But anyway, different story. Of course, they're producing oil there, right? Carney in his group, in the previous Trudeau in Canada, wanted to put on a carbon cap on their production. So they were going to create peak oil in Canada. How do you think the Canadian provinces, think about that? Saying, hey, guys, once you produce so much oil, you produce so much carbon, I don't even care if you take the carbon out of the air. We're going to cut you off. Does that make business sense? Does it make sense for the environment? No, it only makes sense if you want to take money out of the hands of people and put it into green energy people. That's the only way it makes sense. But, we're seeing big wins, tax cuts, and big, beautiful bill. We're going to see from the tariffs, we're going to get money in our pocket. That's like a stimulus check that, by the way, wasn't paid for by debt, but paid for by other countries paying their fair share. Now, listen, I'm a free market guy. Do you think I like tariffs? No, I don't. But we live in a real world, right? A real world where everybody else is tariffing us, right? And I think President Trump realized, hey, we have to take back control as opposed to letting other countries dictate tariffs. We lead tariffs, and that way we put the money in our pocket as opposed to taking it out of the consumer's pocket. So when you look at, the blueprint for what's making this all work, lower energy cost, historic high stock prices, we're seeing consumer confidence rebound, though it was down today, it's up, it's going to rebound. You keep those prices down, it's going to be good. Tax relief, business boom, American first. Even Goldman Sachs has raised their growth forecast to 2.5% growth in the next quarter. Lutnick and the Trump administration, Mr. Lutnick, Howard, is saying that we're going to see even bigger growth and bigger rate cuts and bigger tax refunds, right? So you talk about the wind turbines of growth. What we're seeing here is a private sector that is thriving. And part of that is because we're putting the power back to the people, not the government telling us, hey, we got to do this. We got to regulate this. We want to put you out of business. We've got to sue you because, you built a racist bridge 50 years ago. That's madness. Let's deal with the problems we have today and get prepared for the economy of the future. And also, too, when you look at energy prices, not only have they gone down because of drill, baby, drill, they've gone down because of peace and prosperity. And one of the things that I've followed very closely for years is the sad story of Venezuela, the socialist revolution, where Hugo Chavez was going to steal from the rich and give everything to the poor. Except the problem is the rich left and there wasn't anything to give to the poor except for what it went in Chavez and later on his crony Maduro's pocket, right? So the economy collapsed, one of the saddest stories you're ever going to hear. And the socialist government ransacked the future of the Venezuelan people, but Trump has given it back, right? Trump got rid of the guy, Maduro. His people didn't want him there. He was getting in with the drug dealer to keep things going. He was giving a presence to terrorists from other countries, allowing people from Russia, Hamas, and Iran to go in these countries and even get into our country, creating a risk for our people. And we said, no more. Let's go back there. But let's also talk about the hemispheric reality of the fact that Venezuela, the U.S. built the Venezuelan oil industry. It was the U.S. oil company and investment that made that happen. And if you look at the bigger picture, when you see what's happening out there, they have the biggest reserves in the world. And by removing him, you're making the world a safer place, but you're also creating a new source of heavy oil for the United States that our refiners love to use, right? And we're also giving this country hope. This is a country that has so many rare earth minerals. They've been blessed with gold, billions of dollars worth of gold up in those hills, beautiful agriculture, beautiful country in many ways. And yet it's been falling apart. With Trump going in there, they're giving the people hope. And during this transition period, they can rebuild the economy. We could have an industrial revolution in Venezuela over the next few years that's going to benefit everybody in this hemisphere. So what we are doing is we're taking back what was ours, what was stolen from U.S. energy companies, rebuilding their country and giving the Venezuelan people a chance for a future, right? Obviously, too, the other things that we've seen during this cold weather, isn't that a pretty picture? I thought it was kind of nice. We're seeing this, of course, provide a real world reality during this cold front that many people are experiencing. And because of President Trump's policies, We had people that died during this coal blast. It would have been a lot worse if Kamala Harris was president. And you want to know why? Because President Trump reversed the fact of closing coal plants that we actually needed to keep the lights on during this cold front. If they weren't there, we would have seen more power outages, more than likely more deaths would have occurred because of that. And we also used more oil and gas, which wouldn't have been there under the previous administration's policy. So a realistic approach to this. We only have to go back a few years ago to the storm we had in Texas. People died, they couldn't keep the lights on. Texas has an energy surplus now because they've learned from that, they prepared from that, but also because of President Trump's policies. I've even heard a report today that they're pausing LNG exports, or there's a call to do that, to make sure we have enough natural gas. Wind and solar, as good as it is, as great as it might be, it's not carrying the load. Very small percentage of what's there. And I know if I had a solar panel outside, it wouldn't be doing very well. Not in Chicago after all the snow and the cold. So this massive heating fuel caused a demand spike, but we're able to meet that because of that. But look at this. I mean, we've had snow and ice from Arizona to Maine. We had refinery outages, lost production. And the reason it wasn't a lot worse is because of pro-energy policies here. I want to get more into that a little bit. I mean, the Secretary Wright, he was calling grid heroes in action, keeping the lights on. He said the Department of Energy rose to the occasion. They put letters out to power grid operators, to deploy backup generators, get things going. Their priority was to prevent blackouts and save lives, lower costs. None of that would have been possible if you closed the plants or if you shut down oil production. So the short-sighted, hey, we got to save the planet, oil is bad. Let's not even talk about it. Let's not even engage the energy industry. Realistic policies made a big difference. And that's why I think energy should be in your portfolio, because we're going to get into that a little bit. We also, of course, saw big spikes in natural gas because of the freeze-offs. Well, in natural gas, we had up to 70 BCF cumulative freeze-off. We could have lost even more. That caused a natural gas spike. But if you look at natural gas, they're still at historically low prices, mainly because of the U.S. shale revolution and energy policies that kept us in that way. We think natural gas investment is at historic lows. Look at that for your portfolio. We also, of course, had a historic bill that passed earlier this year to push through oil and gas leases. Under the Trump administration, we've seen more leases issued because of these policies. That's going to provide lower prices and more opportunity for the economy to grow. In fact, federal energy revenue doubled under President Trump's reform, despite the fact you lower rates. Now, everybody said that when they lowered royalty rates to the energy companies, it was a giveaway to big oil. You're just giving them money. No, the reality is it's the opposite. When you allow them to do their work, you're going to get more production. You're going to get more taxes, right? If you don't give them a lease, they're not going to do anything. They're not using leases. They're not using leases. Who cares if they're using them? If they're paying taxes on them, let them sit with them. You see, and so this shows you the hypocrisy of the left. They say they want more revenue, but then they don't want to do what it takes to get more revenue. You can't have your cake and eat it too. I can, but nobody else can. I can have my cake and eat it, but that's a different thing. But anyway, so we've seen a lot of legislations go through. One of the big three, the Department of Energy Independence Act, was a game changer move, and it was a bold turnaround from all Biden anti-energy policies. It was a rebuke to the former administration that used to call the energy industry price gougers and war profiteers. You know what? I know people in the energy industry. They care about this country, and they care about Venezuela. They want to get back in there. They want to fix it. They want to help the Venezuelan people. And of course, they want to help their shareholders too. So it's a win-win-win for everybody. We talked a little bit about precious metals, and that gets into a lot of what's happening with the Manhattan Project of our time, to build artificial intelligence, which is the economy of the future. And to win the AI race, we're going to need metals. Look at that golden suit, beautiful. We're going to need commodities. And the only way we're going to get those commodities is to mine. This move towards Venezuela, they have a lot of the commodities that the world's going to need. It's going to benefit the Venezuelan people as the world and the hemisphere. And it's going to keep us with a competitive advantage economically and geopolitically above our rivals in China and the rest of the world. It's going to keep America's economy dominant. All this talk about dollar de-dollarization and people not wanting to use the dollar. I would bet that over the years, the dollar's not going anywhere, right? Because there's a big competition in the world between the US and China. Whoever wins this artificial intelligence race is going to lead the world. Do you want the United States to lead the world or China? That's where the question comes in. But then when it comes to what's happening, we talked about this at our last meeting, silver and gold. I don't know if we made it in your presentation, but I wrote a piece that, that once silver took out the Hunt Brothers high, that we could see silver double in price. Well, I don't know if we said that in your presentation. I think we did, but if I didn't, that's what I did say in my reports, and that's happened. We hit $100 on silver. What's a better investment? I can't make up my mind, silver or gold. Gold was the better investment. Silver, they couldn't get above $50 forever, right? And that was the Hunt Brothers high. And the banks, after the Hunt Brothers came in, took control of the global market. They were keeping silver at a particular price. They didn't want it to go above $50 for a lot of reasons. They were hedging it. They had problems. Some banks, I'm not going to mention names, were actually accused of manipulating the silver market and paid fines. But they've lost control, right? They did have control of all the supply. It's kind of lost control, and that's why we've seen silver prices break out. It's like an animal that was caged up for 50 years, and once it escaped, boom. And don't be amazed what can happen in silver. The moves are going to be incredible. But the banks have lost control. And right now, U.S. refiners can't keep up because people are bringing their silver service sets. I think Charlotte melted down all her silver, I think. I don't know. She could have. She might not have. I don't know. But that's a rumor. I'm not going to spread rumors, but this is it. But we are going to see the safe haven flows go. I mean, central banks have been buying gold like crazy. They've been doing it for years. And a lot of people say, oh, they're buying gold because they don't trust Donald Trump. Well, guess what? They started this massive buying spree during COVID when prices were low, the world was adrift. They had a lot of cash coming in. They put it into gold, and they've continued along that way. But it's also about the demand, what we're seeing, the demand for silver and gold. I mean, you look at these numbers are already old, and I just put them out there a few days ago. Bank of America saying silver has the potential to go to 135. Well, they hit 117, so they're almost there. Maybe as high as 309. The World Gold Council, Family Focus on Generation Wealth, they're putting gold bars, central bank reserves. But anyway, what we're saying here is that the demand for silver for a lot of different uses, electric cars, we used to say, well, silver they use in film, they stop using film and camera, so the demand, industrial demand's gone, right? It's back, right? It's back in electric cars, electronics. Gold, of course, is with Bitcoin, the long-term, store of wealth during inflationary times and deflationary times. But what you're really seeing is gold and silver reasserting themselves after years of being held back. We're also seeing geopolitical risk figures that's coming into gold. Some people are blaming the Iran situation, crowd managers. Some people are saying that 45% sees the trade as crowded or overvalued. Some of those people weren't in earlier, right? The geopolitical disaster in Iran obviously has people buying because of geopolitical concerns. We also see concerns about debt around the globe. And even though here in the US, I think it's going to get better, even though it keeps growing, it's growing at a slower pace. Debt around the world is still high, especially if you look at Europe and the money that they're spending to fight the war in Ukraine is a big deal. The other thing, of course, is electricity demand is through the roof. It's going to get bigger. Artificial intelligence is driving it. The electric car boom, I don't know if I'd call it a boom, but that's driving it. And the massive infrastructure spending. But this is driving everything. You know, you're talking about aluminum and tin, copper. And copper, of course, is the best conductor of electricity. Platinum has been on fire. Palladium, you know, auto catalysts, tight supplies. We see record demand for platinum. I believe, what else we got? You know, EV technology, platinum, palladium, all that stuff is really driving it, right? Charlotte is even, you know, hoarding supply of this, I believe, or jewelry, but I don't know if that's true either, but it probably is. But if you look at mania fundamentals, metals have been the top performer. So if you didn't have them in your portfolio, you didn't have the top performer in your portfolio. You need to get some exposure this year. It has geopolitical risk. You know, I call it the perfect hedge for every occasion, right? You're worried about inflation, buy gold. You're worried about World War III, buy gold. You know, right now, all of those risk factors are driving the prices. You're worried about a lower dollar, it's good. Is it going to go straight up forever? Probably not. Could it go up a lot higher? Yes. Is the volatility going to be high? Yes. Is it going to be higher than it is today a year from now? Probably. So get some exposure into your portfolio. There's a lot of ways to do it. You can do it with physical metals. You can do it with futures. You can do it with ETFs. But if you don't have it, you have some of the stuff that you've missed in your top performing sector. Now, some people worry about, you know, when you have your portfolio, you have stuff, if you have metals that are in there that are too high, you've already got big profits. It is possible that you could reduce some of that activity and put it into energy, because energy is undervalued. But I like both sectors, right? And right now, the hot sector obviously is the metal, because this is a historic time for enthusiasts. We have supply crisis, record demand, silver lining playbook, right? And President Trump, of course, had AI as an investment vehicle. You know, who was it? Griffin's big hedge fund. I believe is it Blackwater? I forget, but Griffith's, the big hedge fund, check online. They didn't want to invest in metals, right? And I'm like, we don't like the metal sector. We don't like it. Guess what? They're like, hey, we get it. We understand that we've been missing out. So they announced that for the first time in years, they're getting back in the metal. So that's a real key thing here. Anyway, but we're talking about more data centers. 20 technology companies are talking about major money from private companies to rebuild the infrastructure. CoreWeave, 6 billion new data centers. There's one going in Illinois. I think they're using the old Board of Trade technology, but the growth in that sector is going to be crazy. Data centers, a 15% increase in energy demand, maybe this year. Emerging markets like China, they're also scaling up. So it's powering the future right now. And I think I've pretty much hit it real here, but I want to go back. I'll end it with the Hunt Brothers because we only have about 5 minutes left. Is that right, Charlotte?
We have just under a minute left now. We're cutting right up against time.
$50. Hunt Brothers are smiling somewhere on silver. So 1 minute, you got a question, go. The 1 minute question.
Fantastic, Phil. Well, actually, I don't have any questions in the chat at this time. We did have a lot of comments, people just going back and forth about the views that were shared. But is there anything that you think is most important to leave our viewers with today? Any important messages that you want to send out?
I got into business, went to the Hunt Brothers, were cornering the market, right? And the amount of money that was being made was ridiculous and lost on a daily basis. It was just stunning. In some ways, when you look at these metal markets, this is the best of times, it's the worst of time. Not since I got into the business trading commodities have I seen the type of explosive moves that we're seeing on a daily basis. That could end tomorrow, but in some ways, like I say, it's the best of times, it's the worst of time. The best of times because the amount of the moves is you can get so much profit in such a short, like anything we've seen in 25 years, right? The bad part is, of course, you can lose that much as well. But I think for smart traders, selective traders, if you pick your spots, the risk is worth the profit potential. If you can control your downside, you can be wrong 5 times. And if you're right once, you can be way ahead. You don't get those opportunities like this very often. So there you go.
Thank you, Phil. I know I just said that we're out of time, but I just got a couple questions in. So I'll see if I can squeeze this in here.
Okay.
So
I'll go fast.
XY is asking, what's the best investment right now? Gold, oil, anything else in your opinion? Now, Gerard asked if it's still a good time to buy silver, so I'll add that to the list.
I mean, right now, oil is cheaper. So they're both great investments. The easy money has been made on silver and gold, right? I mean, once you broke that $50 high, it was like it should double in price, and that should have been a high probability trade, and it was. Once you make that kind of move, when you're in historic highs, it's hard to say how high is high because we don't know. Some people are saying $300. Listen, once you make these all-time highs, you can go a lot higher. So I think it's a great investment, but you better be ready for some volatility. Now, one thing that we're hearing right now is that prices are high. People are melting down their silver. So you're going to find more supplies. You get to a point where high prices do start to cure prices, you're going to find silver coming out of the woodwork in people's china cabinets. I've heard that refiners can't keep up because everybody's selling their silver. But from long-term investment, do I think silver is going to be higher a year from now? I think it's very probable it could be a lot higher a year from now. The energy's more of a quiet play, but from a value viewpoint, really good. And what was the other question? I'll go fast. I'll try.
He was just asking for silver. Is it a good time to buy or wait for a drop?
Boy, well, you've got a good time to buy and a good time to sell. The volatility is high. It depends on your risk portfolio. If you're doing the actual futures, it's going to be really volatile. So I would, if it's your first trade, I would wait for a substantial drop. The FOMO trade can really run you over. If you're doing physical metals, start to price them. If they seem too high, call me. I do have some physical ideas for you that I could share. And you're going to put my number up there for them to call, I guess, right?
Yes, absolutely.
Okay, cool.
All right. Well, in that case, looks like we were able to get those couple of questions. So thank you very much, Phil, for joining us.
Have a wonderful time and enjoy the beautiful Iowa sunshine today.
Oh, yes. That gorgeous Iowa ice just coating the ground everywhere I step.
It's going to look good. Well, be safe out there.
Same to you and same to everyone in our audience. And I hope you do all stay tuned as we have more in store for you today. But as always, have a wonderful rest of your day. Take care.